So with being certified in divorce lending, that means that I see a lot of things in the world that have to do with divorce and mortgage lending that maybe other lenders don't see. And what I will tell you is there are a lot of loopholes and a lot of guidelines and nuances to divorce lending that there are not something we see in the normal lending world. Just recently, this past month, I had 3 situations that I'm working on, all clients of mine from past that are now going through divorces, unfortunately. They would love to keep the home, they want to keep the kids in the home, and they need to pay off the ex-spouse in order to do that. What does that mean? Well, what happens is when you own a home together and you and your spouse bought a home, let's just use round numbers. Let's say you bought it for $500,000. And you've been in the home a period of time, and now the home is worth $800,000. And maybe the mortgage balance at this point is only $350,000. So if the home is worth $800,000 and you owe $350,000, the difference is the equity in the home. And typically that is split between both homeowners, meaning you, if you'd like to stay in the home, would need to pay out to your spouse half of that equity, the difference between the $350,000 and the $800,000 value. How would you do that? Well, usually we use a cash out refinance or potentially a home equity line of credit. But if we need to get the ex-spouse off of that first mortgage, it would need to be a cash out refinance. What we would do is we would do a new loan that would be enough to paying off the $350,000 balance on that mortgage in our hypothetical situation, and also enough additional cash to pay off the ex-spouse, the difference between the $350,000 and the $800,000. So a new mortgage amount that would enable you to stay in the home if you are the spouse that wants to remain, pay off the ex-spouse, take them off of the existing mortgage, and be able to move forward with your life under this situation. Now, there are a lot of, again, like I said, nuances to divorce lending. There are questions like, do you need support to qualify? Will you receive maintenance, child support? How long do you need to receive it before we can use it for income to qualify? And those things matter, and it really depends on if it's an FHA loan, where we only need 3 months history, a conventional loan, we need 6 months history, and how long will it remain? You need to have it for at least 3 years after the loan closes. So lots of things to look at, but there are many lenders who don't understand that if all we're doing is paying off the mortgage and giving cash out to you to pay off the spouse, this isn't necessarily a cash out loan. If it's a true order per the MOU, Memorandum of Understanding, or the divorce decree or separation agreement, then that is not considered cash out. That is a guideline where we can utilize that special guideline, and it's not a cash out loan, meaning the interest rate will be less. Other things to know are just how do we utilize the decree, how do we look at the decree, and how do we help you with your mediator to make sure that we approve you in a way that's going to enable you to move on with your life, whether you're the exiting spouse or the spouse remaining in the home, or maybe you'll sell the home and you'll both move out and buy something different. But a lot of times, if the client comes to me after the decree is already done, signed, sealed, delivered, and there's something in there that's preventing you from qualifying, it's too late. I really encourage you, and I work with a lot of either attorneys, divorce attorneys, or mediators, so that we make sure we set you up for success and we are involved while you're putting together these agreements to make sure that everything in there is going to work for you to qualify. I recently had a situation where a borrower's soon-to-be ex was a very strong commission income employee, smaller base, and he was wanting to make her support variable based on commissions every single month. Well, it's very hard to qualify for a mortgage like that as the spouse receiving maintenance. She won't have a history of receiving it. We have no average, and it's just not the ideal situation. So they went back to the drawing board, and they're working through another situation where we can get an amount that she can count on every single month based on a 2-year average of what he's earned in commissions. So again, just being involved with that lender while you're going through the process could make all the difference in the world. help. If you have questions, if you or a friend or family member are going through the unfortunate situation of a divorce or a separation and you want help with that, we'd love to help you. One last situation I'll tell you is sometimes the spouse, they decide to separate. They don't do a formal separation. They just decide to live separately. And if the person moving out, maybe they're going to buy a condo or whatever, they don't qualify on their own, the other person can be a non-occupying co-borrower. So they can help assist with that loan, even though they're not going to live in that new property, whether it's a condo or home, but still use their income to help qualify. And we've done that as well. So there are lots of situations that, again, your typical lender that is not certified in divorce lending, meaning they're a CDLP, it's a true certification, they won't know that there are these additional guidelines that could actually help you get to where you need to go without being held back based on a situation that is out of your control at this point, potentially. Give us a call. Let us help you structure something that's going to work for you.